Okay, everybody, so let's break down this article very quickly here, and I'm only going to go through the high points. Federal Reserve Chairman Jerome Powell on Tuesday cautioned that interest rates are likely to head higher than central bank policymakers had expected, citing data earlier this year showing that inflation has reversed the deceleration it showed in late 2022. The central bank leader warned of tighter monetary policy ahead to a growing economy. The latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. Powell said in remarks prepared for two appearances this week on Capitol Hill. If the totality of the data were to indicate that faster tightening is warranted, we will be prepared to increase the pace of rate hikes. Now, those remarks carry two implications. One, that the peak or the terminal level of the federal funds rate is likely to be higher than the previous indication from the Fed officials. And two, that the switch last month to a small percentage point increase could be short-lived if inflation data continues to run high. Now, in their December estimate, officials pegged the terminal rate at 5.1%. Current market pricing moved higher following Powell's remarks to a range of 5.5 to 5.75%, which is higher, but Powell did not specify how high he thinks rates will ultimately go. Now, restoring price stability will likely require that we maintain a restrictive stance of monetary policy for some time, Powell said. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. Powell noted that some progress on inflation for areas such as housing. However, he also noted there is little sign of disinflation when it comes to the important category of services spending, excluding housing, food, and energy. That is an important qualifier considering that the chairman at his post-meeting news conference in early February said that the disinflationary process had begun in the economy, remarks that helped send stocks higher. Markets mostly had expected the Fed to enact a second consecutive quarter point or 25 basis points rate at the next FOMC meeting later this month. However, Powell has spoke markets priced in a 69% probability of a higher half-point increase at the March meeting, according to CME Group data. Powell reiterated that rate decisions will be made meeting by meeting and will be dependent on data and their impact on inflation and economic activity rather than a preset course.